Hello, everybody. Welcome back to the Penny Lane podcast. In today's episode, Blayne is joined by mortgage broker Keith Fitzpatrick. They discuss what factors go into getting a mortgage, the effect of inflation on the housing market, and navigating the new world of increasing interest rates. A big thank you to our sponsors, Magic Mind, Rhoback, Espinita Tequila, and Last Bottle Wines. Don't forget to like, subscribe, and leave a review. Enjoy.
Hello, Keith. Welcome to the Penny Lane podcast. How are you?
Hey, I'm good. Good morning. How are you?
Good. So this is an interesting episode because I very rarely have people on that I know IRL. There's only been 3 people actually so far, and none of them I know as well as you. So would you like to tell the audience how we know each other?
Sure.
I'm interested. Interested to
I
hear
am married
this,
to. I'm married to one of your best friends, Lindley Knight, who is a realtor at your mom's company. So, yeah.
I feel we could say my best friend, and it would be
Okay,
truthful.
best friend. Yes,
Yeah.
yes.
Did you not want to overstep there?
I was trying not to, but
Right. Hard to put words in my mouth. Right. And you guys just had a baby. Actually, there was a very famous moment on the podcast, a little production snafu on our part, where I was in the middle of an episode and Lindley was in labor, and she called, and I, in the middle of the episode, it wasn't live, took the call and was talking to her. She's like, I love you so much. This is going to be great. And the editor forgot to cut that part out. So all the Penny Lane podcast people know that is sort of the most real life moment we've had on the podcast so far. And now it's your baby.
Right. So Jones made the podcast. That's awesome. I love it.
Right. Yeah. I wish he was there now just for a little Simba moment.
Yeah. He's at school right now. So
how old is he again?
He just turned 5 months old. So
you're headed into good. That 6 month window, like 6 months. Babies just get great.
Well, he's growing up faster and getting bigger than I thought he would. I mean, he eats like unbelievably, and obviously Lindley's doing a great job. She's a fantastic mother. I should probably do more, but yeah, she's doing great. Jones is good. He's sleeping all through the night now, which is great. He's about to go on his first airplane ride this week, so I'm a little nervous about that. So we'll see.
All right.
Yeah.
Would you ever say that Jones is growing like a weed? Is that a phrase in your lexicon? Yeah.
I've said it before. I would. Yeah, he's growing very, very fast, like insanely fast.
Okay. So we also have a little inside joke here on the podcast where my co-host, who is not here right now because he's trading, slacker.
Okay.
Sometimes when we get on the podcast, I say, Bo, I haven't seen you in a month of Sundays. And he doesn't know what that means. And so it's an ongoing, like when different guests come on, I'm like, do you know what a month of Sundays is? And you're from Buffalo. Do they use that phrase there, or do you know what
I've definitely heard my dad say that phrase before. So
love it.
100%.
Love it. All right. Well, you're from Buffalo. Would you like to give me a 45-second spiel on what's going to happen with the Buffalo Bills this season?
We're going to win the Super Bowl. I don't need to give 45 seconds on it. Josh Allen is a god. I have a huge man crush on him, and he's going to take us to the promised land. So I'm very excited about football season. I can't wait.
And how about our dogs? We feeling good about our dogs?
I am feeling good about the Bulldogs. I think they have a good opportunity to repeat, but obviously the SEC is insanely hard. I'm sure Alabama's revamping and going to give us a run for our money. So,
run for our money. Love that. Except, I hope they don't give us a run for our money.
Me neither.
Yeah. All right. So Buffalo Bills are teeing up to win the Super Bowl. Georgia came off a national championship. You had a baby. For all intents and purposes, things are good for you right now.
Life is good. Yes, life is good.
Life is good.
Can't complain.
Okay. So that's great. The audience probably feels like they're best friends with you right now, which is
Good.
amazing.
I hope so.
Yeah. One more little side note is, did you know that Jimmy, my husband, his biggest man crush is Phil Mickelson?
Really?
Yeah.
I did not know that. Even with him going
Yeah.
to the Live Tour.
He went to the Live Tour. And
Yeah.
I don't know what that's done for Jimmy's crush, but it can't be good, right?
Yeah.
Like that, it can't be good.
Well, you went from seeing Phil Mickelson every week on the PGA Tour to the Live Tour. Doesn't play nearly as many events, but he's definitely making a lot more money. So,
We were at the PGA Championship in Kiowa when Phil won. That was a good
I bet that was
time
exciting.
for Jimmy.
Absolutely.
Yeah.
Yeah, he played very well that
funny
tournament.
because Jimmy's dad is not a Phil fan, so that dichotomy was lovely.
It didn't go over well that Phil won with Jimmy's dad. Was he rooting
just
for
thought
Koepka?
he was kind of a tool. Well,
I
Koepka is kind of a tool as well. He just thought he was kind of a tool, and history really played out that Phil might be kind of a tool.
I think he's pretty cool, but he's not looking real great right now going to the Live Tour. I'll say that. In most people's eyes, I think he's floundering a little bit, but we'll see.
What are your thoughts on the Live Tour? Would you take the money or would you stay for the glory?
I would love to be in the situation where I was a good enough golfer where I had to be able to make that decision first off,
Sure.
but I'm obviously not.
But you're pretty good. You're almost there.
I'm decent.
You're knocking at the door.
Yeah,
Sure.
I still lose a ball or two around, so it happens. The Live Tour, I think they kind of paint this picture that they're doing this whole new radical thing for golf and everything, but really to me it looks like it's all about the money. Whereas PGA Tour has all the history and everything, so I think it is causing a little bit of division in the golf world.
Oh, totally.
And you've got people like Tiger Woods yesterday was he's at the British Open and he was speaking out against the Live Tour, and Rory's speaking out against it, and so it's creating some division. And then PGA Tour said that the American players can't play in the Ryder Cup, which is a huge event this year, and so that's not good for the U.S. team. So we'll see how that unfolds.
What do you think Augusta's going to do? You think the Masters is going to say that Phil can't come back? Because, oh my God.
No, I don't think they'll do that. You never know what Augusta's going to do because they're their own entity, but I don't think they'll do that. I think they'll they love a good story. They'll welcome him back as a previous champion. I know he wasn't there last year, so but you won't know until the week before. So,
you don't think my boy Bubba's going to go on the Live Tour, do you?
I don't. No, I think he's going to stay in the PGA Tour.
You think because he's a purist and a good man?
I do. Yeah.
Yeah.
I think he's going to stay.
Oh God, I love Bubba.
He's rehabbing though right now. He's hurt. So.
Yeah, ACL, right?
I think so. I can't remember what he hurt. I think you're right though.
God, why is the market? I do. So CPI data just came out. It is Wednesday, the 13th, and SPY is just ripping. I don't like. Sometimes I think that I understand the market, and just you get one little ounce of I think I understand, and then it humbles you.
It does. Yeah, it's been humbling me a lot lately too.
So you and me and Lindley got into some crypto not too long ago.
Yes.
Yeah, you want to take a spin through that topic?
I am not holding a lot of crypto right now. I'm waiting for it to hopefully come back.
Okay.
But we have been exploring the mining aspects, mining, just getting the rewards.
You were not exploring the mining aspects. You were mining crypto.
Okay.
let's get let's go
And
ahead.
we haven't made nearly what we thought we would. So,
Yeah. Have
but
you made back your initial investment or no?
I think we have. Yes.
Okay.
So
This is good. God, I like nothing made me happier than sitting on the porch watching a Dogs game and Lindley being like, "So I'm going to start mining crypto."
she got really into it.
She got
It
really
was
into it.
very cool. Yeah, which
Well,
was cool. It got me more into it too.
yeah, the entire well, Lindley loves like I can get into this. And she loves like when the little miner came and she had to like set it all up. She's very good at that. That stuff makes
Oh
me
yeah,
very, very nauseous, but not her.
absolutely.
Not her.
I mean, she was all into it. As soon as it came in the mail, she was setting it up and going to town. So, yep.
What a wife. What a woman
What a
to be
wife.
married
I
to.
love her. She's amazing.
I mean, Jesus, she's buying a crypto miner.
Yep. I never
One
thought I
should
would see
be
it, but
so
I did.
lucky to be married to her.
Very lucky.
Okay, so you're not holding any crypto at the moment. Weren't we in were we both in Coinbase or Coin Wallet?
Yes, I was
Yeah.
I was trading out of Coinbase, and I had some Bitcoin and some Ripple. I was really into Ripple, but I'm still holding a little bit of Ripple, but I've sold most of it off.
Is there a dead reference there?
A dead reference?
Yeah,
like a Grateful Dead reference.
Yeah.
With Ripple, I don't think so. No.
Okay.
Ripple's all about the MoneyGram transfer of money and stuff. So, yeah.
Well, that's unfortunate.
I'm sorry, I wish there was.
God, me too. Yeah, I am still in Coinbase, and Coinbase, I feel, does a bit of a disservice to me by every day sending me emails that are like, I'm in this thing GRT or something. Every day I get an email. GRT fell 25% today. Every day. And I'm like, how much further can it fall? Like, continuing to fall 25%. But
I don't like emails like that because they give you just crazy amounts of anxiety when it comes to. Sorry, Lindley's behind the computer trying to mess with me right now.
Oh, let's see your face.
Do you want to pop in real quick?
I'm good.
She can't do that. Wait, put the headphones on her. I need to ask her about the crypto mining real quick.
She wants to ask you about crypto mining really quickly.
No.
She's embarrassed.
Crashed and burned.
I wasn't going to describe it like that, but
I'm basically like I was in the ride for like a month straight.
Yeah.
But we're hoping. We're hopeful.
It'll come back. We'll get back into it.
Tell her I have $17 in my account to show for it.
$17? We're not going to tell people that.
In the green?
That's not good.
I'm an expert.
That's how much she has left over right now is $17.
Oh, but she had like 1,500, didn't she?
Yeah, she did.
Well, the miners were like 300 a piece. Like that doesn't really count. Like.
So we haven't made back the initial investment. That's what I thought.
Well, I made back some of mine. But
let me look at it right now. 1902.
There you go. You're up, babe. You're up.
There we go. We're on a tear.
All right.
All right, I need SPY to reject here. And as it's rejecting, which I'm putting into the universe, let's get into the topic that I really invited. I love to get off topic and just chat. And, some
Nothing
people
wrong with
who
that.
listen to the podcast, a small section of people I think enjoy a chat. And a larger section of people are like, STFU, let's get to the point. And that,
right.
I get that, but it's my podcast and the chatting makes me happy. So
there you go.
Maybe I'll put in the notes, like, if you would like to learn about mortgages, go to 14 minutes. So I'm so excited to tell you something. You know how I've been posting my P&Ls on Twitter and they've been getting so much better?
Yes.
Okay, so I've been using this new product called Magic Mind. And, we're really into like biohacking and making our brains better. And it's full of nootropics and it is phenomenal. I used to take a ton of Adderall, and then, as you know, I had to stop because I had the heart condition, and this is so much better than Adderall. It is like, I'm so calm, I'm so focused, I'm so efficient. I have been doing things that I've been putting off for years just because they're like on my list and I'm just doing them. I'm not like that. I'm a creative.
So this is the magic sauce, huh?
Yeah, you just take this bottle in the morning. It says it's best to try it for 3 days. And I thought maybe I was having just a placebo effect. So I got my husband on it. He's will not go to work without it. And then I also have my mom on it. I gave her 3 bottles and she called me yesterday and was like, I have to come over and get more bottles just so that I have them before my order arrives. We're all on it. And man, our minds are really popping.
Wow. Sounds like I am missing out.
Yeah, you should try it. Let me tell you how. You can go to magicmind.co/penny, which you can also find at the link in this episode. And if you use the discount code penny20, you can get 20% off a one-time order or 40% off a subscription. Now, I would recommend you go ahead and get the subscription, but if you want to try it, that's fine too. And this offer is only good for the next 10 days. So we have to get the whole team on it. Can you imagine how streamlined the podcast will be?
Sounds like a game changer to me. 40% is a lot.
That's a lot. That's a big percent. I really do want to get us all on it so that we can just be like trading superstars and podcast superstars.
Well, I'm going to the website right after this then.
Okie doke. Hi guys, I wanted to introduce you to our new sponsor, Espinita Tequila. They sent me some bottles to try, and this is, the unopened one, but I think it's so lovely. I love their branding. It's so clean and fun, and I just think it's beautiful. I also have tried the tequila, and it is very good. Like, I really like just a tequila and soda or just tequila on the rocks. I really like tasting the tequila, and I think that this tastes great, has a great aftertaste. And, tequila's popularity is really on the rise. All my friends now are drinking tequila and soda when they used to drink vodka and soda. So if you want to try that, you can certainly try this brand. They're doing very cool things as a company, and you can click the link in the bio and find out more. So, Keith, I invited you on the podcast. Love to talk about golf, love to talk about football, very much, love talking about crypto mining. But I really invited you here today to talk about mortgages. And funny enough, here I've been in the real estate industry for 16 years now and own a home. I couldn't tell you very much about mortgages. So I'd love to get a real soup to nuts look at mortgages. So let's just do a very, very simple, in the broadest sense, what's a mortgage?
What is a mortgage? Okay. So when you want to purchase a home and you don't have all the liquid cash to do it, you have to borrow money from a lender or a bank, and they are going to assess you an interest rate where you pay the money back monthly so that you can go and make the purchase of your home. And depending on how you qualify for said mortgage is what kind of mortgage you're going to get, depending on what kind of money you make, what kind of job you have, how your credit is. A lot of people that I talk to about mortgages and that call me about loans, they're so focused on their credit score, which credit score is very important. But there's so many other factors that go into it and to go into qualifying for a mortgage. Income being one of them, debt to income ratio, your obligations with your credit cards, your car payments, student loans, those type of things all affect your debt to income ratio, which is how you qualify to see if you can actually make your monthly payment back to pay the lender or the bank back your mortgage.
Okay. So let's say I'm making, let's say $80,000 a year, and I want to buy a home. Should I first start guessing what I can afford and start looking at homes, or would the first step be to contact a lender and figure out what I qualify for?
You should certainly contact a lender. or a broker like myself. I'm a mortgage broker with CTC Funding here in Marietta, Georgia.
Wait, what's the difference?
And-
Oh, you're a broker.
Correct.
So
But
you put me in contact with the lender, or
Yes, but I'm your
working on
loan
it.
officer too. I do all the work for the lender. It's not like a situation of where I just find you a lender and then we say goodbye. No, I'm with you through the whole loan process. I help you get pre-qualified. I help do all your loan application. I help you with all your paperwork. I walk you through the appraisal process. Obviously you got to have a realtor as well. And then when the realtor helps you get under contract, most loans you're going to need an appraisal on the house. I walk you through that. I'm going to walk you through all the fees and help you get homeowners insurance. If you're not putting 20% down, you're going to have mortgage insurance. 20% down payment, you're going to have mortgage insurance. So I walk you through how that works, and I shop it out for you and try and find you the cheapest possible. And I'm with you through the whole loan process all the way through closing.
So, let's say you're like me and do everything backwards, and I just find a home that I love, contact a realtor, and then need a mortgage. Can my realtor help me find a mortgage broker?
Absolutely. We work hand in hand with realtors. The good thing about a mortgage broker like myself is I work 24/7. So I'm working on the weekends. Whereas if you're going to go get a loan from like one of these larger banks like Bank of America or Wells Fargo, more than likely you're not going to be able to talk to a loan officer on the weekend. So if you go out and shop and look for a house and you find it and you're like, wait, I don't have the money for this yet, I got to get qualified. Like I'm going to be able to qualify you on the weekend. So yeah.
That's fantastic. So you work on the weekend, your wife works on the weekend. You guys are a weekend working couple.
We are.
Does that sound bad? That might sound bad. But you know,
No.
It's work on
Some say we're a power couple. I don't know if I would say that though.
Sure.
Sorry,
no,
she
I
walked
think
in
that
again.
applies. Power couple. For sure. I mean, you could qualify it with like
Real power. Yeah.
real estate power couple, or
There you go.
general. There you go. All right. So you guys are a power couple. You work on the weekends. I want to know if there are people who just like absolutely just like cannot get a mortgage. Is there anything that said don't pass go, you're never going to get one situation, like a felony? Can you get
Well, most of the time, the big thing that gigs people on not being able to get a mortgage is not having employment. So if you are self-employed, it's a little bit harder to qualify. I can certainly still qualify you, but you have to go through tax returns, tax transcripts, those type of things. It's a little bit more tedious. Whereas if you're a W-2 employee, we're just looking at your W-2s, so your last 2 years, and your last 30 days of your pay stubs. We do contact your employer, make sure you're in good standing, all that. So.
Cool.
Most lenders like to see 2 years of continuous employment. There has been some issues with COVID, with people losing jobs, and lenders have come around and understand that as long as you can explain why you lost your job because of COVID and stuff, you can usually get that through.
So tell me, I know you told me before we started recording, but will you tell me again how long you've been in the mortgage industry?
Sure. So I've been in it a little over 2 years now. I grew up in like a banking family with my parents being bankers, and they always taught me to manage money pretty well and to save money. And so when I went to go buy my first house, I had already saved up money because my parents had been teaching me. And I got into flipping homes for a little while.
I didn't know that.
Yeah, that is. I don't want to go back to that. That was a lot more stress than I want to do again. But that's when I started learning about mortgages. Because I had to get a couple mortgages for houses and investment properties. So, I met a guy in my Bills Backers of Atlanta group named Mike Rischel, who is a loan officer, and Lindley had been telling me, you would probably be really good at this. You like to talk about money. You follow the market. You're good with people. And, I used to work at the Ritz-Carlton. So have like a customer service background as well. So I started talking to him about it, and I got to working with him, started doing some processing, and then I had to actually go and get my license, which was quite difficult. I did pass the exam and started originating loans from there. Last year was a really good year for me. There was a ton of refis going on, refinances, and
Yep. And
purchases
so last
as
year
well.
being 2021, so the
Correct.
market, the real estate market was hot. And
Yes.
tell me why people were refinancing last year.
Well, there's two types of refinances. There's a cash out refinance, so where you can access the equity in your home and pull money out of your home and do projects with it, or go buy another property, or pay off debt,
Start
or
a shoe line, whatever
start a shoe line.
whatever
Yep.
your fancy is. Yeah.
Or you can do a rate and term, which is if your interest rate is a little bit higher, say it was in like the 4s or 5s. Last year we were getting people into the 2s, so we would do a rate and term refinance and lower your monthly payment, $200, $300 up to $600 sometimes. I got a couple people down quite significantly, and it's a lot more fun to have a mortgage where you're putting less money towards it, and paying off
Totally.
your principal more. So
Totally. So we refinanced, I guess, 2 years ago, and it was because the rates were so low. Can you talk to me about why the rates were low during 2020 and 2021? What happened in the market to make that?
So the bond market was the 10-year bond is usually what we go off of, what Fannie Mae and Freddie Mac and investors go off of, was down quite low, and that was causing interest rates to be down low. So people were able to get lower interest rates. So it was a good time, but we've had some inflation issues in the country, and the Federal Reserve, or the Feds, have come out and hiked interest rates. Within the last week or two, though, we have seen it coming down. But I know everyone's really scared of interest rates right now. They're not where I would like them to be either. I don't enjoy handing out interest rates in the 4s, 5s, and 6s. It's not fun for me when I'm quoting someone and they're upset about what the interest rate is because of where we're at right now with the country.
I feel like we got in the 3s, like
yeah,
3.5 maybe. We were slightly later than all the very, very smart refinancers. It took, as always, it took us a little longer.
Right. Well, there's nothing wrong with being in the 3s. That's great. That's a really good interest rate. My first house that I ever bought, I was 7.5%. And I remember talking to my dad when he bought his first house. He was 17%. So, in like the 70s. So if you look at the last 10 years, we're actually still on a low with regards to mortgage rates. Although everyone has gotten accustomed to 2s and 3s, and now we're in the high 4s this week, 5s and 6s, depending on your credit score and how much money you're borrowing and all that stuff.
So historically low.
Still, yes.
Irrational exuberance? When it comes to killer wine at drastically low prices, 30 to 70% off retail and free shipping, we live for that here at Last Bottle Wines. Whether you went long or short on GameStop, you'll need a glass of something terrifically tasty, and we've got the goods. Last Bottle is a daily wine site based in Napa, California. One wine every day at Black Swan event prices, usually 30 to 70% off until, poof, it's gone. Whether you're a pound-the-table type, think ultra-crisp, quaffable Sauvignon Blanc, or a dividend aristocrat, Burgundy, or Napa Cab, there simply is no better place to buy wine on the web, and they always have free shipping. Last Bottle has a deal just for Penny Lane listeners. Use promo code PENNY10 to save 10% on your next order with Last Bottle. The code is good for one order and one order only.
What was the imbalance between the demand for real estate and the ability to get a mortgage? Like, were you approving people left and right, and then they couldn't find a house. Was that an issue?
It's definitely an issue. Last year and a little bit into this year, even had a very significant amount of clients who are pre-qualified, and especially here in the Atlanta market where we're at, that were pre-qualified and out shopping and just couldn't get under contract. And I think that's a major battle that realtors are still battling, is just how competitive. There's more people trying to buy properties than are actually available. So it's still kind of a seller's market. We are seeing some corrections that are going on. People selling houses and are bringing their price down. So that's a good sign that maybe the market is kind of swinging back the other way towards the buyers. But there's definitely a lot more people shopping than selling.
You're still finding that?
I'm still seeing with a couple of our clients, that they're still having a hard time getting under contract. But I know that a lot of these realtors out here, like my wife, they're working very hard to get their clients under contract and trying, new and exciting things to get their clients.
New and exciting things. So what is the multiple offer situation? Is it because we were in a time where there were 45 offers on a house and you literally couldn't get one? Has that slowed down some?
Yeah, it has a little bit. I still think it's going on a lot, but not nearly as much. And in that aspect, if you're going up against other people that are trying to make offers, you want to make the best offer that you can. So, getting pre-underwritten, getting the pre-qualification process completely out of the way is the best way to go. So, we can lower your financing contingency, those type things, to make your offer to make it better.
I like that. So is it still in this tough real estate market? Is there an advantage to putting more down? Does that give you a leg up?
It does. It makes you look like you're more serious about the house. When you're putting more skin in the game, more money down on the house, it makes you seem like you're a lot more serious about what you're buying. But the average home buyer doesn't have 20%. I've seen statistics lately that it's somewhere around 3 to 5% of what the average home buyer is trying to put down is what people actually have. The average median income in the U.S. right now is around $58,000. If you're putting money down, for instance, and you're going to put 20% down, like let's say a $350,000 home, so that's $70,000. Like, your average home buyer doesn't have that sitting in their account right now. And then you got to pay closing costs as well. So you're going to have to go a little less down. Well, we have loan products now where you only have to put 3% down. And I think sometimes it's a little bit more difficult to get those people under contract because they're very serious about buying the house, but they're, saving their money, squirreling it away, as I call, and doing the best they can, working hard, working overtime, putting money away. And they're not able to get to that 20%. And then, you wind up having to have mortgage insurance, which is another extra little fee that's on top of your mortgage that you don't get that money back. So saving money is very important, but the average American home buyer is not putting 20% down. So,
how can you this? I don't have an angle here. I'm just genuinely asking. If you're making $58,000 a year, inflation is so high, gas is so high, the cost of living is so high. How does one say, how do you do that?
Well, there's a lot of issues going on now. So, so if you're not buying a house, you're more likely renting. You got rental prices are up 40%. On average across the U.S. right now. It's astronomical what people are having to pay for rent. So it's a situation of, I still think the American dream is owning your own home, and I don't think that will ever go away. You want a white picket fence, a yard, although you're seeing a lot more people, especially here in Atlanta, buying townhouses with very little yards, and that's fine. Have a piece of property, have a piece of this country that is yours. But you gotta get qualified. You have to reach out and figure out what you can actually afford, figure out what you feel comfortable with, figure out what you feel comfortable paying every month towards your mortgage and such.
At this moment in American history, do you think it is better to rent or buy?
I think it really depends on your situation. If you're renting and you're okay with renting and you're happy with that, like, you just have to understand that your rent is probably going to go up unless you live in a rent controlled area. And you have that in your rental agreement. If you're renting and you want to buy eventually, but you're not feeling like the market is right for you right now, obviously, put as much money away as you can. The more money that you have to bring to the table to put down on the down payment, the better you look. It's kind of in between. I really can't give you a complete answer on that.
That's okay. I'm so, I just feel every day so thankful that we own this house, and we bought it at a time when prices were reasonable, and then we were able to refinance. And so as you know, as my friend, we would love to own a house with a basement. We have kids that are the same age as your kids, and they want a playroom, and we would there are things that we would like. And to get into a house that would, all we need is a playroom and a basement and maybe a laundry. Our laundry's in the kitchen, which drives me nuts. So that would be on the perfect wish list. Otherwise, our house is ideal for us. And we would have to pay twice what we paid for this house. And I can't be the only person in that situation of just feeling kind of screwed, because families grow and families shrink. That is the ebb and flow of having a family. And it just feels impossible. It feels impossible right now. And I'm sure but there are life situations where people literally have to move.
Correct.
And I think that's why, well, you're also a fireman.
Correct.
Can you say that? Yes.
Yeah.
Also a fireman. But you were a double essential worker, right? And you're doing the fires, but Lindley, I know, was an essential worker. It is an essential part of life, and it feels economically like it is setting people up for they're playing a losing game. That's sort of how I feel a little bit.
Well, real estate is very frustrating. It requires a lot of patience. It can be very stressful. I think that was one of the reasons why I wanted to become a mortgage broker and loan officer and help people go through that process, is because every time I went through it, it was super stressful. And, I try to, as a loan officer, I try to figure out what my client needs with regards to talking. If you're having anxiety about, when you're going through the loan process at, late at night, I'll talk you through it. If that requires texting or emails, I'm all about that. Or if you're the type of client who wants to be left alone and just wants to know when the disclosures come out, I'm fine with that too. That's part of my job is to figure out what my client needs and to try and take care of them when it comes to the loan process.
I could see you being exceptionally good at that because you're such a trustworthy person. I feel like you're a no judgment person. I could tell you anything, and you'd be like, okay, how do we move forward from here?
Well, I think that's where the fire department kind of helps me with this job. Is I've been in the fire service for 14 years as a firefighter and paramedic, and I've seen a lot of stuff.
Yeah.
It takes a lot to really shock me. So, and I think those high intensity situations on fire scenes and emergency medical scenes have caused me to be able to handle more stress. And the loan business and mortgage business and helping people with loans in real estate is very stressful.
Absolutely. How do you deal with taking on your client's stress? Are you able to compartmentalize, or do you feel that?
I feel for them when they don't get under contract. I feel for them when they're going up against other clients and they don't get the house that they want. Because I've been there. Like I've gone and looked at houses before. I mean, even when Lindley and I were buying this house, we had a couple that we didn't get, and we thought, this was the house that we want to live the rest of our lives in. And I feel like everybody says that, but if you look at statistics, it's like the average homeowner only owns their home 3 to 5 years before they move on to the next thing. And that's where it comes back to your people outgrowing their properties, having more kids, growing their family, needing more space, having to move somewhere else because of a job or something like that. So there's a lot of factors that come into that. With regards to me and my clients, I do feel like I do kind of take on some of the stress with them. I'm actively involved in what you're going through. I want you to feel like I'm here for you, and I empathize in what you're doing and what you're trying to do and getting your home and making your dreams come true. Because like I said, I think buying a house and owning a piece of property in the U.S. is still the American dream.
Totally. I really absolutely agree with you that it is the American dream. Talk to me about the stock market, the bond market, and the mortgage interest rates. Like, talk to me about how those things are interconnected.
So if we look at the bond market, I've got it up on one of my screens right now. I follow I just use Yahoo Finance. I find that to be the easiest thing.
Yeah, great charts on there.
Yeah, I'm looking at the Treasury 10-year, and what it is today. Like, for instance, at 293. So if you look at it overall, historically over the last 10 years, it's still below where it was. If you look at it where it was around the 2008 housing crisis, it's still below there. It was 343 when we started to enter that. So what that is it's just when we have in the morning, interest rates come out Monday through Friday. The lenders will usually let them out around 10 to 11 o'clock. And I get inundated with emails from different lenders that we broker deals with, and we look at their interest rates. And what they're doing is they're taking the 10-year bond, what it's priced at, and depending on what their investors are doing, they have a margin in between there where they make their money. So if it's at 2.93 and they're quoting you, depending on what your scenario is, let's say 5%, that margin in there is where they make their money. But when they quote their rates, they have to quote them off Fannie Mae, Freddie Mac, or VA or FHA, so that they can have the ability to sell that loan back to them. And when they go to underwrite the loan, it's backed by all their regulations, so they're able to sell the loan back to them if they need to, if their investors want to move their money elsewhere. So that's how that works with regards to the rates. Usually we don't see rates. We see rates kind of go up on weekends, usually Friday, because that's when the average person goes to shop and buy a house. It's usually on the weekend. So you will see like Friday rates get padded a little bit sometimes. Usually like Tuesdays or Wednesdays rates are usually sometimes a little bit better. So that's where it comes into my business. When you get under contract, I'm shopping to see what the market's doing. If we want to lock in right now, or if we want to maybe float a day or two, see if we can get you a little bit more lender credit, have your rate go down a little bit, and try and lock you in at a 30, 45 days, 60 days, depending on if you're doing like a construction or how long it's going to take you to get the house closed. I mean, we can usually do it in less than 30 days. So
Interesting. How has the stock market being in a bear market affected people's ability to buy houses, or are people our age generally not as invested in the stock market as, say, people our parents' age?
no, I think it has a lot to do with it, because you're seeing clients borrow against their 401ks for down payments. You're seeing, I have clients who are, wanting to pull crypto out, which is a new thing for lenders. Is they want to take some of their cash in some of their crypto and use it as a down payment on a house. And lenders are getting there where that's okay to use that as a down payment, but there's a lot of hoops to jump through. I mean, you got to go back and look at statements from the last 2 years to see, where that money's coming from. There's a lot of people, when I'm qualifying them stuff, and I talk to them about what their bank statements are and, deposits and stuff like that when they're putting in, they sometimes get like real stressed out about like, well, why does the lender want to know why I have this $15,000 deposit? Well, they want to know where that money's coming from, because they want to make sure, when you look at what a lender looks at you like I look at you, like, if let's say you're my client, Blayne, and I look at you like you're Blayne and married to Jimmy and has 2 kids, and, you guys have 2 dogs and you're looking to buy a new house, blah, blah, blah. The lender doesn't look at all that stuff. They look at you as a number. So they're not looking at you almost like a person. They're looking at you like, this person is a loan number, and here's where all their money's coming from, and they want to make sure that you're not doing anything shady. And unfortunately, a lot of people do shady things with money, and there is a lot of money laundering that goes into mortgages. People will try and clean money through getting a mortgage, and there were some issues with it. There were some issues with that in 2008 and previous, but we have a lot better underwriters now that underwrite and pre-qualify loans and stuff that look at that stuff, and it's highly scrutinized. So
interesting. So people are Marty Birding their mortgages.
Wow, great reference. Yeah.
Yeah, I liked it. I was pretty proud of it.
Yeah, fantastic show, by the way. I was really happy with the way it ended. I know, it was very sad, but they ended it perfectly.
So sad. You really thought so?
Oh yeah. I mean, I hope I'm not spoiling anything for anybody, but I was sad how it ended with Ruth, but overall, I just thought they ended it great. I mean, it was a fantastic show.
You sort of wanted to see Ruth on a desert island, like in a mansion, just gangster style, or
absolutely,
or as the new head of the cartel.
I couldn't see her as the head of the cartel. I just wanted to see her being successful, because she had, been run through the laundry so much. So
she's also ruthless.
Absolutely. Cutthroat.
See what I did there with the play on words?
I see that. Yeah.
Yeah. Felt good. Bo.
Blayne.
We're hat twins.
Yeah, we are.
Yeah, we are. I'm so excited that we're sponsored by Rhoback now. I have been wearing my gear ever since it came in the mail, and I love the colors, but I especially love this little dog. I wore him to the pool last night, and people were giving me the thumbs up.
Yeah, this stuff is awesome. I had heard about it before and always wanted some, but now that I have it, it has exceeded all of my expectations.
Is this your first time receiving a gift in the mail from a company and like opening it and checking out the product?
It might be. It certainly is associated with the podcast.
I have gotten those before, and I was blown away by the quality of this product. It far exceeded what I thought that it would be, and I truly think I'm just gonna like live in it all fall.
Yeah.
It's so comfortable.
Yeah, I've been playing golf a lot this summer, and so I like all my golf gear, but the thing about golf shirts is like the sleeves are always too long and they're always too baggy, and like, I'm relatively in shape guy, so this fits me perfectly. I still have full range of my arms to swing a golf club, and like I could wear this doing anything, not just golf. Like they got hoodies, they got quarter zips, it's like nice and stretchy. I love every single thing I got.
Me too. I love it. It all looks so good together. It's part of a set, and I feel so thrilled to be able to offer our listeners a 20% off code, which is
Penny 20.
All right. So you go to rhoback.com, which is RHOBACK.com. And you just enter Penny 20, you get 20% off, and thank us when your order arrives, because it's lovely. You also know how much I love opening experience. Like I'm such a snob about packaging and the way things are presented, and it was a treat.
Yeah, the shit's awesome. I'm not like,
yeah.
Don't even have to like, I would just promote this to anybody regardless of a sponsor or whatever, because this shit slaps.
Also, you've already been like low key pumping out the penny 20 to your closest friends because you really believe in it.
No, absolutely. I'm sending this to all my friends because it's shit I think that they're going to want anyways. So, why not take advantage of the discount and rep it everywhere?
Totally. Thank you, Rhoback. We appreciate you.
Thanks, Rhoback.
All right. Well, we are back. And is there anything that you in preparation for this podcast were thinking that you would like to share as far as your knowledge of mortgages go that I have not asked you?
We can maybe talk about like some of the things that go wrong and why they go wrong. I kind of look at loans like this. There's always going to be something that pops up. I've never had a loan that was just totally perfect. Underwriters are asking questions, and we have to go out and find those answers as the loan officer. Where you got this money from, where this investment came from. Why'd you move this money here? And people get upset about that. And I think the one thing that you have to understand when you're going to try to get a mortgage is you're going to be under the microscope. And part of my job as a loan officer is to let you know that and be there for you. That like, hey, this is going to be a little bit tedious. This is going to be a little bit stressful with regards to when they start asking questions. That's why my job is so front heavy before the loan even starts, is going through all those things and trying to think like an underwriter, and knowing my regulations and stuff depending on what loan program we're going on. Getting with my account executives when I see something that isn't going to make sense that I think an underwriter is going to ask questions about with regards to money or how you're making your money and type things. And people just got to understand that it can be a little bit stressful. Take a deep breath. We're going to get you through it.
Interesting. I wonder if it's harder, since I've been day trading, I have not applied for a mortgage. I wonder if that is more respected than like a crypto situation. You would think, because I'm on TD Ameritrade. I have a 200-page document that I could submit, but it would seem to me that it's hard to convince a bank of I'm going to keep this up. Day trading is sketchy as hell. So
yeah,
I don't know.
I do like
to it though.
I do like TD Ameritrade's platform. I use them for my 401k. So I love their research. I find it very easy when I want to trade stocks and stuff to look at what the company's doing and what the future is and all that. And very impressed with it. Have been for a while.
Totally. I love TD. They're going through some flack right now because they're not being fantastic to big traders. They've failed them in a couple ways.
Yeah.
But I'm a fan. I'm not leaving.
No,
on the
me
TD
neither.
train. Yeah. So, man, I do not have a 401k.
What?
I don't have
Need to
a
get that going.
401k. I know. I really should. There's a lot of things that I need that I don't have. So maybe we should have an offline chat about that. Maybe life
Absolutely,
insurance, which I also don't have.
I think life insurance is a must.
Sure.
Planning for your retirement is a must. Investing is in your future and your kids' future. Having college fund is a good idea. But talking about investing, I do invest some in the market, but I still think the best way to invest your money is real estate. I'm never gonna. I don't think I'll ever change my mind on that because it's one of the most safest ways. I mean, you can buy a property, especially here in this market, in this area. Property values are going up, so all you're doing is making money, and it's safe. It's tied into your home, and it's insured because you got to have homeowners insurance. So, yeah.
What's your thought on the secondary housing market right now?
What do you mean, like second properties and stuff, like vacation homes and stuff like that?
Yeah, vacation homes.
I know that I would like to have a vacation home one day. I don't, but
Sure.
I'm looking into that, definitely. I think if you can afford it and you can put your money into a property that you can buy and use as a property that you and your family enjoy, building happiness. And then, when you're not there, you want to rent it out and Airbnb and build like another revenue stream. That's nothing wrong with that. I think that's great. I mean, we have many clients that I've helped buy investment properties that do that. I mean, I set them up as, they get a mortgage for the property. Now you're going to get a tiny bit higher rate because it's a little bit more risky for the lender, because you're not, it's not a primary residence for you. So you're not living in that house all the time. And there are more people, more factors coming into that home. So you might get hit with a little bit higher interest rate, but you can take the money that you're making off rentals, off Airbnb, and those type things. And, I see plenty of people making money off that and having a nice little revenue stream from it.
I have this dream of buying a second home here in Atlanta, a small home, and using half of it as my art studio and the other half as an Airbnb so that I can have a free art studio. That has not come to fruition yet, but I would like to put that out in the universe as like, that would be my ideal art studio.
Sounds like some good tax write-offs too.
Totally. And I could use the Airbnb to display my art. And so I could get like beautiful Instagram photos, and maybe people come stay at the Airbnb and they're like, this art's banging. I want to take it home with me. Yeah.
Well,
yeah.
we do
full of business ideas.
We do enjoy your art in our house, as you can see.
Oh, there he is. There he is. Yeah. I feel like I'm doing myself a disservice by not having a painting here. That's actually on my to-do list this week, is to change out the background and get a good Blayne art piece up there,
Yeah, go for it.
Well, Keith, this has been just delightful. I appreciate your time so much. Thank you so much for coming on. Learned a lot about mortgages that I did not know.
I appreciate it. And, if there's anyone in the Atlanta area that just has questions about mortgages or is looking to get a mortgage and wants a very personable loan officer, feel free to reach out to me.
Absolutely. We'll have all your contact information in the show notes. Now, we have an international audience, which I'm not sure the international people, but if someone in Texas just wants a very what do I do step one, could they reach out to you, or is that
Absolutely.
in your jurisdiction?
Yeah. I'm only originating. My license only allows me to originate right now in Georgia. I am working on other states actively right now, though. But yeah, I'm happy to answer any questions for any of your listeners.
Cool. I feel like I've said, you're very trustworthy, and getting a mortgage, I feel, is intimidating. Like, you don't want to go in and be feeling dumb about it. I feel like you want to talk to someone who's going to make you feel like, yeah, we can handle this. This is what you need to do. And I don't know, I think you're very good for that.
Well, I remember the first time I went to go get a mortgage, I had been working at the fire department for a year. I had my 2 years of work history. I was just trying to buy a $120,000 house, and I was scared. And my dad was very good at warning me of what the bank was going to talk to me about. So I was kind of ready. So, but the loan originator guy that I had there, he was not personal at all. He looked at me like I was just some idiot kid. And, I remember that interaction, and every client that I interact with, even if they have no idea what they're doing, I try to explain it to them, dumb it down the best I can. And then, sometimes I don't have all the answers. And if there's something that pops up, that's the good thing, is I work on a team. I have another guy, my mentor, Mike Rischel, that he's been doing it for 25 years. I can tap into him or any of my account executives that have further knowledge. So I will find the answer. That's a big part of my job. Is sometimes there are situations that arise that I've never seen before, and I will find that answer out for you.
Totally believe that. Well, Keith, thank you, and thanks for taking the time after coming off a shift at the fire department. Really appreciate it. And have a great trip. Tell Lindley I say hi. And any listeners, just click down in the show notes. Get in touch with Keith.
All right. Have a good day. Go Bills.
All right. You too. Go Bills.
By accessing this podcast, you acknowledge that the Penny Lane podcast makes no warranty, guarantee, or representation as to the accuracy or sufficiency of the information featured in this podcast. The information, opinions, and recommendations presented in this podcast are for general information only, and any reliance on the information provided in this podcast is done at your own risk. This podcast should not be considered professional or financial advice. Unless specifically stated otherwise, the Penny Lane podcast does not endorse, approve, recommend, or certify any information, product, process, service, or organization presented or mentioned in this podcast, and information from this podcast should not be referenced in any way to imply such approval or endorsement. The third-party materials or content of any third-party site referenced in this podcast do not necessarily reflect the opinions, standards, or policies of the Penny Lane podcast. The Penny Lane podcast assumes no responsibility or liability for the accuracy or completeness of the content contained in third-party materials or on third-party sites referenced in this podcast, or the compliance with applicable laws of such materials and/or links referenced herein.